Okay, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to talk about Palantir. All right, we're going to break down the chart as always, give you guys a nice technical analysis, but we're actually going to go over some of the fundamentals, right? So these are basically the past 5 years fundamentals for Palantir. Okay, and you can see right here that all of the analyst ratings are at a hold or a void right now. So we're not seeing any buy ratings. And, again, we'll take a look at the chart and break down, why that may be. But if you can't do fundamental analysis, or maybe you're not a pro at it, all right, today's sponsor, Simply Wall Street, actually makes it very, very easy. Okay, they have their pros doing the fundamental analysis for you guys, and we'll break down using their platform some of the earnings growth and some of the fundamentals that could be in store for Palantir next year. So it's going to be a really exciting video. And, it's a really great platform, Simply Wall Street. They also give you the information on whatever stock it is that you're looking at. But if you take a look at the stock market right now, the current PE ratio is 29 times. And the 10-year average is 27.2. So we're just above, right? And you can see the total market cap versus earnings and revenue. It's a really great platform. So, we'll go ahead and get into the video. But before we do, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. If you're new to the channel, I actually started a completely free newsletter for you guys called Investment Intelligence, giving out free valuable finance content, trading content, and I try to sprinkle in 1 to 2 free trade ideas a week. And this is what they'll look like, highlighting the conditions on the chart, showing you guys the chart itself, and giving you a nice breakdown. Many of these trade ideas have worked out very, very well. If you take a look at the website, because there is a website associated with it, so it's also kind of a blog / newsletter, you can see many of the stocks have ran up very well. And many of these trade ideas have worked out very well because it's about quality over quantity with me. So I'm not spamming your inbox every single day with 5 to 10 different emails or trade ideas, but rather looking for 1 to 2 high quality setups to share with y'all. And if you want to join the Discord, where you get access to all the different trade ideas, all the different analysis. I am actually doing a New Year's sale right now. So promo code New Year, all caps, just one word, that will get you into the Discord for just $1, right? So we talked about PayPal, we talked about Teladoc, right? But we didn't go over Palantir, Chewy, Carnival Cruise Lines, Toast. There's been many, many plays, and you can gain access to all of the different analysis that I post, all of the different trade ideas I'm looking at through the Investment Intelligence Discord. It's normally only $10 a month, but I know a lot of people have small accounts, so I am doing $1 for the first month, and you can feel free to leave if you don't like it after the first month, or you can just sign up for the free newsletter. Now, let's get into the video here, and starting off with Palantir, this is a basics, just taking a look at some of the fundamentals. And if we were to take a look at the 5-year trend for Palantir, we can see earnings per share, the trailing 12 months is on a nice 5-year trend here. All right. We also see over here, return on equity has been doing good. We see the profit margins, all right, has been growing up here on a 5-year trend as well. So, those are some nice things to see, right? Some nice things that you would be looking for. The PE ratio, all that stuff is over here. But if this is a little bit too complicated for people, for your average person, again, we mentioned Simply Wall Street. It's a really great platform. And so if you take a look, it's currently trading at 22.3% Simply Wall Street's estimate of its fair value. Now, this is their share price versus fair value right here. So it's currently at 17.17, and they've got a fair value of around $22. Now they're using a discounted cash flow model to come up with this. And, some people don't know how to do discounted cash flow models. Some people calculate them a little bit differently and things like that. But, again, what I really like about Simply Wall Street is that it does a lot of this for you, and it gives you quick summaries, and, you can come in here and quickly find things that you're looking for on the stock that you want. For instance, if we look at Palantir, right, over the past 7 days, over the past 7 days, it's gone down about 1.4%. But if you take a look over the past year, Palantir really, really outperforms not only the U.S. software sector, which went up 56%, but it also outperformed the U.S. market, which went up 24%. So Palantir, was a really, really large outperformer in 2023. And if you take a look, the price volatility is higher than the industry standard. And that's going to come with, really great returns. It's going to be really volatile as well. Now, if we were to take a look at some of the earnings and revenue growth forecasts Okay. In blue here, we've got the revenue forecast. So this is where we're currently at. Okay, 2.125 billion a year, all right, for revenue, and then earnings 147.3 million a year. And so they're forecasting those to head upwards and they're projecting them to continue to rise into the future, into 2024 and 2025. And so if you take a look at their earnings versus savings rate, their forecast earnings growth of 34.7% year is above the savings rate. And quickly, if we were to just take a look at the forecast annual earnings growth, so you have Palantir right here, 34.7%. The industry standard is 18.1%, and the market standard is 15.1. So this is a really promising chart. If you take a look at the forecast annual revenue growth, all right, you can see here 18%, 12% for the industry, and then 8% for the market. So Palantir looks really good from these particular aspects. Now, typically high growth companies are going to be seeing 20% or more a year when it comes to revenue growth. So Palantir is kind of dropping below there, but that doesn't mean that there's still not room and good room for growth, right? 18% is very nice. And they just break down everything. So if you can't look at this chart and figure it out yourself, they also just give you some quick statements. Their earnings are expected to grow significantly over the next 3 years. Their revenue is forecast to grow faster than the US market. Their earnings are forecast to grow faster than the US market. So some really nice stuff, very simply put for you guys through that Simply Wall Street platform. There's a link in the description, okay, as well as the pinned comment down below. You guys can sign up. If you use my code, it will get you a discount. I've used them before they were a sponsor, and so I am happy to have them as a sponsor. Now, what about the chart itself, right? What is the chart showing us? What is the chart telling us? Well, this big shaded area right here, this is what's known as a gap, okay? And Palantir has many gaps, but this is the most important one, most relevant one to us at the moment. And notice how there's a gap in between this candlestick and then the next candlestick over here, right? And this happened around earnings. It had a very good earnings report, and the stock gapped up. You may hear people talk about that term, gapping up. Well, the big thing is that, 90% of the time gaps tend to fill. And so when you know that, the big question is, okay, well, is this a breakaway gap, right? Is this a runaway gap? And that's what this was. And we continued that movement up higher. Again, the big question is not so much if a gap is going to fill, but when is a gap going to fill? And so this gap was all the way, months and months ago. All right. And we can see that now we're very close to coming in and filling this gap. 1708 is basically support, and the stock basically just closed right above there. If we break 1708, we're going to start filling this gap potentially. All right. Now, that's something that you want to be a little bit cautious of if you're looking to buy in right here. Now, shorter term for trading opportunities, this is a really good trade setup for both longs and shorts. If you're looking for intermediate and shorter term trades, you can come in here and you can look to long and long around 1708. Above 1708 you're bullish, right? And then you put a stop loss right over here, maybe around 1658. You can see it was resistance here, resistance here, resistance here. So it's a pretty nice level. That basically when we were above it, we couldn't really flip it to support and continue going higher. We ended up coming back down above this level, right? So if we were to call this a range, right, and we were to say that, hey, we've established a range right here, we had basically what's known as a look above and fail, right? So, we came up above the range and then we came back down within the range, and ultimately we gapped up over that level. After earnings, we ended up gapping up over that level completely, right? And now if we were to break through 1708, it's possible we could find support at 1658. But if we break through there, then there's a very high chance that we're going to come down and start to fill this gap. Now, this purple line here is our 200-day moving average. So if we were to come down and fill this gap, that would put the stock right around $15, and also our 200 SMA would be there, right around $15. So that'll be a really interesting point for me. I'll definitely be interested in it. As we just took a look at some of the fundamentals, it looks like some of the fundamentals have some promise and are showing some promise heading into the future. And so now you just kind of have to determine, are you trying to trade this right now, or are you trying to, invest in this for the long term? And so if you're looking to invest in the long term, you can wait a little bit, even though there is that 22% target and it's currently like 20% undervalued. below its fair value according to Simply Wall Street, that doesn't necessarily mean that it's a buy right now or that the stock can't go down before potentially reaching those prices. Now it got very close. Okay, if you see here, 21.85 most recently, to hitting around that $22 fair value price. So that's pretty interesting as well. That basically once it came right up around 22, it started to sell back off. We talked about the long idea, right here. If you also wanted to short this, right, and maybe you wanted to grab some puts to try to potentially catch this gap fill to the downside, you can come in here right around 1708 and you can have a stop loss above 1749 or 1819. It's really, from a risk to reward standpoint, in a good area for both trades, right? If we were to, again, long it here, okay, and have a stop loss here, and you're targeting maybe this first move or some of these, higher levels up here, you're risking about this much to potentially make, anywhere from here to this much, right? So it's got a really good risk reward setup, with a tight stop loss at the current levels for a long. And also if you were to short it again, and you're shorting here and you're looking to target the gap fill, you're basically targeting this much and you can risk this much here or this much here. So, you would risk anywhere from this to potentially up here to this. Those are good risk to reward ratios. And at the end of the day, it's all about finding good risk to reward ratios and then letting the trade play out. Either your stop loss triggers and you're fine with that because you respected your idea and you respected your trade, or take profit hits. And as long as you have good, high, risk to reward ratio trades, then it's okay to lose a couple trades because when you do win, then that trade will outweigh the losses that you have. All right. So that's it for today's video. Don't forget to check out the sponsor, Simply Wall Street. Use that link in the description. If you enjoyed today's video and today's analysis, and you feel like, maybe you need some of that one-on-one personal interaction, you can always click on my commissions tab here on my Ko-Fi page. There's a link in the description for my Ko-Fi page as well. And that's where, anyone can book a 30-minute or a 1-hour coaching session with me. I do these coaching sessions all the time, and a lot of people want to cover things like day trading dynamics, swing trading strategies. Maybe they want some basics on how to do some technical analysis, but I also have a lot of people come to me for, options, right? And different option strategies and how you can, leverage shares that you own, to get some downside protection, to hedge against that, or to, do things like covered calls, etc. So, feel free to reach out to me on my Ko-Fi page. Right, you can sign up for the Investment Intelligence newsletter, giving out free valuable finance content every single week, or you can just join the Investment Intelligence Discord to get access to all the different trade ideas. Remember, it's only $1 right now. Promo code New Year, that's all caps, one word, will get you into the Discord for just simply $1.